Good morning, everyone, and welcome to Monday's edition of the Morning Bell with me, Richard K. Guys, it finally looks like I've got the YouTube channel stream working. So if everyone's tuning in there today or possibly during the week, then welcome. Touch wood, it's not going to fail. And it looks like we got voice issues already. Just 1 second. Now it's streaming and I'm hearing myself talk. Apologize for that. So guys, if you can still hear me though on the speaker side of things, then just please drop a yes there. There will be a slight delay on the YouTube channel stream as well. I was trying to get all these gremlins sorted out before we actually get going with today's analysis. So again, guys, if you can hear me okay, please drop a yes there in the chat box. And again, to all the guys from YouTube tuning in there, then welcome from my side as well. All right, guys, a quick look at this week's economic calendar. Not much happening for the US or out of the US today. Tomorrow, we only got these flash services PMI figures. Don't think that's going to have any impact. And then on Thursday is the first day of the Jackson Hole Symposium. It's where the Fed and other members of the Fed will be talking. We also got the preliminary GDP quarter-on-quarter figures at 8:30 a.m. EST. I think potentially the most volatile period would start potentially on Thursday, but this is the first day. I think they carry on into the weekend. I'm not sure. Day 2, yeah. Jackson Hole Symposium on Friday. It's when Fed Chair Powell will be speaking. So not much happening leading up till Thursday. Potentially could see a volatile period for Thursday and Friday. All right. That's about it on the economic calendar. Let's jump straight into the markets. For those who are new here, I'll do a very quick rundown when we start. We always look at the ES, the NQ, crude oil and gold. If there's any other futures markets you want me to have a look at, then more than welcome to do that. Maybe drop a recommendation there in the chat box, and I'll be more than happy to have a look at that for you. Again, I use market geometry for my means of analysis. So I tend to look at angular support resistance using different time frames, as well as starting my drawings from different periods back in time. So quite often, the further you go out in time or the higher up you go in time frame, you'll have market geometry lines that can stay in your charts for an extremely long period of time. So just a quick recap before we look at smaller time frame and what I'm currently thinking we're seeing here. Just get rid of this quickly. Is that on the 16th or 17th of June, the ES moved straight into a center median line. All right. We also had confluence between a pitchfork, in this case, a shift pitchfork. I love using shift pitchforks, especially when I think I'm dealing with a correction. Come on, let me just find that high properly. This is the high in early Jan this year before this massive move to the downside. Most prominent lower low and lower high. 3 anchor points to draw your pitchfork. We have this lower, what we call low red warning line. We have a confluence between the upward sloping center median line and a low red warning line where they all came together is where we've seen a bounce to the upside. Pretty strong one at that. We've been tracking with the service when we first started doing the recordings before we actually went live. We started looking at price when it was around about here. And that was, when was this? July. And quite often price will, like a magnet, almost move magically towards these median lines. Now, obviously, there's quite a lot of lines that I have on here. But like I said, during, I think it was Monday or last week, Fridays, or even the Wednesday before that session, that I'll potentially get rid of this one sloping to the downside if price can break this upper median line. But obviously, we also determined a zone before price reached there where potentially price might see a reversal from, and price has reversed on both the ES and the NQ. We'll obviously look at the NQ in just a while. So there's multiple areas of confluence right within this little red box that I have here. And something else I want to draw is if you want to measure a move to the upside with market geometry. Let me just get the right setting going there. That'll be standard. You see price hit the center median line of this move to the upside. So with different angles, different pitchforks started from different anchor points historically, with all came together is where price pulled back into. Now we're seeing a reversal to the downside. Not saying this is market geometry that's causing this, but it's typically we just want to determine support and resistance zones for where price might move towards or find resistance from, and formulate trade entries from that information that we have. So right in that zone where price pulled back lower. And what we've also done was run a volume profile from this previous high in Jan. We previously pulled it towards here, but I'm going to include the recent high as well. So the volume profile includes this move to the upside. You see here where I mentioned this support zones where we got the highest volume node and as well as the point of control. Now I can't see that properly. At 4,122, give or take, right? This is a little red line over here. We got a support one that encompasses this entire high volume area. So this might be a support zone that price is pulling back into. Now let's quickly look at price structure as price moved to the upside. Let me just open this up a little bit more before we go to the smaller time frames. Disarm the snap mode. I've been saying there's one or two things going on here. So potentially we've seen a one, and this being a strong bottom, end of correction, price potentially moving to new highs. And this is potentially the initial move to the upside of a much larger move to follow at some other stage. That we potentially seen a first wave to the upside, an ABC correction, and that this was potentially a third wave. It currently looks like it could have been. We've been anticipating a move lower, and this is what you want to do in market geometry is figure out where such a move might occur from. And it looks like it is happening from there. Then I'm seeing this as a potential fourth wave decline with another fifth wave to follow. That being said, that's the expectation. Currently, we're seeing a pretty aggressive drop to the downside, straight downwards. Quite often, if you're dealing with corrections on a smaller time frame, you actually, would expect to see, but not always. This doesn't always happen during very volatile times. Is some sort of a zigzag behavior into an area and then a reaction to the upside. We might not get that. But we identified the support zone, and I just quickly want to do that properly. We're looking at previous highs that's already been broken here. Price already pulled back into that. The support zone can lie anywhere from, let me just get that right, 4,160 on the upside. And let me just get a retracement level going, assuming that we might be dealing with a fourth wave, right? If this is a third wave high, you'll quite often see your fourth wave pull into the 38.2 for retracement level. Run from your assumed second wave low to, in this case, in bullish scenario, to assumed third wave high. You can do it from a starting point as well. That gives us a little zone on 38.2, a little bit lower at 40,068. So yeah, we could probably update this zone slightly bigger. Again, I will throw let's make it a little bit bigger. Let's do that. Let's get rid of things a little bit there and the lower limit of that zone, although price could easily slice lower than that. But just for now, let's call it 40.84 plus minus, guys. All right. Again, I would rather like to see some sort of zigzag behavior into this area and then a rejection to the upside, and potentially we could then set targets back to the upside again. But at the moment, we'd like to see support step in between, let's call it 4,080-ish to 4,160-ish, right? Okay. It'll be interesting to see how things react, and even if the markets do react to this Jackson Hole thing when the Fed, and especially Powell, does his speeches. All right. Now there's one other thing before I go to the NQ, and I'll go to, sorry, before I actually move to the lower time frame. Let's just get rid of that. Is that I mentioned, I'm hopefully that this move that we've seen since June to the upside is not something like this, where we just see a massive decline lower, just straight down. I mean, there was like zigzaggy behaviors in between. But that is a potential. And if that is a potential, then I think we're going to really see a very deep decline on the ES and the NQ for that matter, and the Dow Jones. That being said, my line in the sand, if this was the first wave high, we don't want to see price pull back into 3,950, because your fourth wave should never pull back into the region of your first wave. Okay. So that's the line in the sand. If we do break below here without making a nice little another high, then I think, unfortunately, there's going to be some big trouble on the horizon, probably for the remainder of this year, with even deeper declines to follow. But again, let's not get ahead of ourselves. Price has reacted from the resistance zone we talked about before, a straight drop lower, and we got that support zone there. So hopefully we see some support step in, hopefully a zigzag behavior, and then a move out of that to the upside. Okay, let's go to the 4-hour chart. And you see these green lines and red lines there. That's the MACD indicator that we have here. It is shows bullish and bearish divergence automatically on the chart. As you probably all know, whatever momentum indicator you might be looking at, you might even be looking at the RSI. You can be in oversold and overbought conditions, even with divergences going on for the longest period of time. What is important is that when divergences happen in my line of work at areas of market geometry. Now, previously on the daily, we did not see momentum divergence at its previous low, but look how beautifully it occurred on the 4-hour chart. I would have actually liked to see this on the daily, but anyway, it happened on the 4-hour chart at those lows prior to this massive move to the upside. Also, divergences 1, 2, 3 times, 3 drives to a high, or 4 drives to a high. This was now 1, 2, 3 drives to a high, and now a sharp decline to the downside from within that resistance zone we identified previously. We might not see momentum divergence or bullish divergence during a move to the downside. We could potentially see that on the 4-hour chart, but things would need to start slowing down. What I'm not liking about this move to the downside, this could very well be a very small A, B, C, and then price moves higher, potentially from here or even lower within that support zone. But it's starting to look very impulsive, right? Prices just move straight down. So, except for this little bounce we've seen over here. So we could actually been seeing a first wave lower, potentially an A if this is corrective. That's either close to ending or might be doing something like this first for an A, some sort of bounce, and then a move down, and then we get that move to the upside. Either way, I think we'll know pretty soon whether the ES is correcting or if it's actually going to start accelerating even stronger to the downside. Okay. Again, at 3,950 looks very far away, but you know, during very volatile times, these levels can be reached very, very quickly. The horizontal line you're seeing here, the red one, and you see also got this green one in that zone that we've or the support zone that we identified using with the volume profile and market geometry. These are the dynamic support and resistance zones indicator that we use here at Ninjacators as well. So, and it updates. It's dynamic in nature. So if we, for example, took price back all the way here, imagine we were trading on the right-hand side of the screen, then these lines update, and they do quite often a very good job at finding highs and lows. And I also do find that if that happens in conjunction with your MACD divergences at areas of market geometry, then very high probability, or very high probability setups occur, or reversals, if you want to say it that way. Okay, guys, so my expectation for the time being, I'm hoping for support within the 4,160 upper limit, give or take 4,084-ish to the downside. And then hopefully, whether it's going straight down now or get there later, and then another move to the upside. This is, for me, a very crucial point to make, that I do want to see that one more move to the upside. So then it really count nicely as a 5-wave structure, i.e. a 1, an A, B, C for 2, a potential 3rd wave high, a 4th wave, and then a 5th wave. Potentially just taking out that high or even moving higher. That for me would be really cool to see, and even enforce the idea more that we potentially bottomed here on the 16th, 17th of June. Okay. Right, let's get rid of this MACDs quickly. How are we doing for time there? Okay, we're 15 minutes in. Let's go back to the daily time frame and let's have a look at the NQ. Not entirely the same price structure since the highs in ES. Actually, NQ started moving lower in November last year already. But similar thing I've done here, we've got a pitchfork that sloped downwards. We had a longer term pitchfork sloping upwards. We've got a beautiful area over here where price just reached area of confluence from different angles and price shot back to the upside. Before I take this divergences off, you'll see that we have divergences on a daily, right in a similar zone that we also identified last week. That being said, on the NQ, the support zone that we're looking at slightly lower than it would be on the ES. Obviously different prices, but in distance-wise. Looking at 12,704 3/4, 12,915 and a half. Again, guys, give or take, right? So potentially could be the first drop lower. Hopefully we're seeing some sort of similar zigzag behavior with another move lower and then a move to the upside. Let's just clear some of this off. Look at the fib work quickly. Open this up. Come. So I'm seeing some lag here again on NinjaTrader. Anyways, let's have a look at retracement levels. Yeah, at the lower end of this support zone, if we measure from here, if we measure from those lows a little bit higher, sort of in the middle of that support zone, we also have this median line running over here within that area that we identified previously. So also these previous highs, right? Price actually almost tested these previous price structures highs, which was low highs on the way during the previous move to the downside. Again, hopefully we're just seeing something like this. Hopefully we're getting some more of a clearer move and then another move to the upside. And here too, although I think this was a 1 and this was a running flat 2 and a 1, 2, 3, 4, 5, potential 3, potential 4th wave correction at the moment. If we do see another move to the upside, again, that'll be really cool. I mean, I think then we're potentially going to see the indices go to new highs for this year. Right, guys, same thing here. If this is a third wave high, then we don't want to see the NQ move back into 12,262 and find support above that level and then move to the upside. Right. Right, so that's the NQ. Similar thing we're seeing on the ES. Let's quickly have it, crude oil. Again, guys, any questions you might have, then please let me know there in the chat box, and I'll be more than happy to answer them for you. See, we've got quite a few people in the room today. That's great to see. Okay. Crude oil, guys, what a mess. I've had the channel lines, these blue lines on my chart for the longest period of time. It's very interesting to see how price continuously respects these lines and these levels. That being said, the crude oil's price structure extremely messy. I've been saying this for the longest period of time. I'm hoping that this is not just some sort of a corrective move to the downside, because that will obviously then mean at a later stage we'll only know after the fact. Well, not after the fact. We could probably have some inkling of what might happen if we find support and move back to the upside, crude oil, that is. That I'm hoping this is not a corrective move. That being said, we really need to start seeing an accelerated move to the downside if this was some sort of third wave instead, which would be great to see. And then we'll potentially even see lower prices in crude oil in the future. But as things stand right now, price structure wise, I mean, look at this mess. And previously we've had some targets that's been hit. We've been saying for the longest period of time, we hope that crude oil will take out these lows that were set in April and the lows that were set in March. That's not happened. Those levels on the September contract lie at 84.95 and the lower one at 84.12. That's the one that was set in March. There, it's been slowly grinding, going up, slowly grinding, going up. So yeah, I still think these levels can be reached, but it's just not happening in one fast go. If that makes sense. It's just been up and down, up and down, up and down. So not a great market to try to trade at the moment, in my opinion, from a swing trading perspective, potentially on much smaller time frames. If you're day trading crude oil. But in any case, with the service, we're trying to also look at what the bigger picture might say, so as well give projections where we think prices might be moving towards. And quite often when you see prices break these angular lines, to a very high degree, they will pull into the next lines. Whether that happens in a day or two, in a week, or whatever the case might be, it can be a very, very effective way of, I won't say forecasting the markets, but getting a clearer expectation of where the markets could move towards. All right, so yeah, sort of lying in the middle here. Previously, price pulled nicely back into these market geometry lines, got rejected. Support at this angular line broke below, and there was at this stage, it was last week, I thought that we were going to at least hit these lows, and that didn't happen yet. And a slight bounce again to the upside. So my expectations still for lower prices here, but when that's going to happen, who knows? Very difficult market to currently trade. Okay, let's go to gold, and then I'll take some questions if you guys have. If not, then we can hang on. Before I do that, something else I wanted to show you. 4 hour. Was it? Yeah, it's the 4 hour. This sideways movement to the downside here looks also, and hopefully this is not the case, like some sort of diagonal sort of shape. So I would really like the price to stay below these lower highs. If you move this one a little bit higher to there, yeah, below the 95.4 region. Make a break below these previous lows, set this today or even Friday, then I think we'll have a good opportunity of potentially moving lower. There was no divergence on the MACD indicator on 4 hour at these previous lows, although we did have that on the daily. Just to be expected when you start seeing this sort of like sideways movement. So divergences between the 5th of August low and the 16th of August low. So for these divergence signals to be discounted, we really need to start seeing, not discounted, but to be, how can I say, reset. We need to see a real strong decline on crude oil, which we haven't seen yet. All right. Finally, now I can go to gold. Guys, previously we said on gold that potentially we could see a reversal from within this area, and that was pretty much trading 101 from a technical perspective. Is price made previous lows, can actually even extend this zone to the left. And you had support, support, support broken, and price pulled back into previous support, now turned into potential resistance. And then we've seen this strong decline to the downside. Now, last week on a smaller time frame, I was saying that I'm thinking this is a corrective move, and I'm not so sure anymore. I'm going to get rid of these support areas that we've been looking for at before. Is not looking good for gold. And one of the reasons why, probably coming back to what I've mentioned previously, is I'm thinking since this high in August 2020 that this was a potential three-wave move or combination of three-wave move for an A. That this was a combination for a B, this move here, and then a five-wave decline, i.e. that this whole thing, this whole structure that we're seeing up here, I'm still counting as a potential fourth wave structure, i.e. corrective move, but just doesn't look like it's over just yet, right? Although here on what we call an expanded flat for an A, B, your C wave and expanded flat does not run in three waves like your A or your B wave did. It runs in five waves. Now it looks like a very clear 1, 2, 3, 4, 5 that we've seen over here. But the problem that I had is that this move to the downside did not reach parity with this move to the downside, or it came very close to that. Just get rid of those divergences. And what I mean by that, I can use my fib extensions. I go from that previous high to this low over here to this lower high. On the December contract, at least, price has not even reached 100% of this drop to the downside. Now, quite often your C waves of expanded flats like to travel quite deeply, at least to 100. And this is now just, studying the behavioral aspects of C waves during an expanded flat. But we just have not that. We not reached it. So, I've been saying since we looked at gold, technically this could have been an important low. Price also really came within a few ticks of this lower median line and bounced higher. Now, since we have five waves move to downside, now this really kind of like brings into question whether this whole thing I've got here is actually of any use or not. And we will only know until price either finds support now or breaks these lows, these previous lows over here. That being said, even if it breaks these lows, you could see a move even lower, right? But in the end, my expectation is from a bigger perspective point of view is that we're dealing with some very nasty, large fourth wave correction. Now, fourth wave corrections before we end today's session, especially if you look at a bigger picture, so I mean a higher degree fourth wave corrections, there's a really cool saying, I think it's from Robert Prechter. If you don't know what the hell's going on in the market, it doesn't make any sense in the bigger picture quite often, then you're most likely dealing with a fourth wave correction. I think that analogy really does fit what I think is going on here. This incredible crazy behavior to the downside, up again, we have combinations of ABCs all the way up. One day, if you guys are interested, I'll actually go into the nitty-gritty of what I'm thinking happened here. But whatever the case might be, let's not break our head too much about how exactly to count these things. I quite like to frame markets within the confines of market geometry as well as to have some sort of idea from a pattern perspective. In this case, I'm still thinking an ABC, and it's either ended or it's not. We got clear lines in the sand, price drops straight down. It's not looking good for gold. But who knows what's going to happen by the end of this week, if at all anything happens. So we'll keep an eye on it. But in the bigger picture, still thinking that gold is either close to or might still be approaching a solid low as a fourth wave before we then see a much larger move to the upside at a later stage. And if that happens and we have on a smaller time frame sort of a 5-wave build out of areas, whether this holds from here or not, or maybe we're just going to see some sort of a zigzaggy behavior now, like an A, a B, a C, and then we go up. That'll be really cool to see. And I think for a large swing trade perspective, opportunity to the upside, it could result in a very, very, very good trade. All right, guys, so that concludes today's session. How are we doing for time? Yeah, we're half an hour in. I'll, as always, be back on Wednesdays with all those guys that attended via YouTube channel. Didn't see any questions coming in there yet. I'm not 100% sure how the YouTube stream thing works, so I'm a bit new to that, but finally I got that happening or working. But as always, to everyone here in our Zoom room as well, David, thanks for the nice words there. Great analysis always. You're more than welcome, buddy. Again, guys, if you've got any markets you want me to look at in the future, then by all means, let me know and I can prep that for the next session. Right, guys, give it a few more seconds, no more questions coming in, then we'll call it quits for today. And as always, be back on Wednesday. Again, these sessions are recorded and will also be available on my YouTube channel. Now I'm streaming it live, so it should be available directly after ending the Zoom session. Cool, guys. All right. Thanks very much for watching. And as always, enjoy the rest of your Monday. And I'll see you again on Wednesday. Until next time, take care and goodbye.